Positive account. Thanks, Mangalam, for all the factors that we have to watch out for. But I would add to that the whole situation on the Ukraine crisis, the overall impact of that as well, tying in with interest rates as well as inflation and demand destruction that we have also been talking about. But one key aspect to watch out for is the rupee movement. Rupee opened at a fresh record low this morning, while the bond yields have also spiked. Lata Venkatesh is here with all the details on the rupee and money market overview. Lata.
Well, over the weekend, the fresh bad news for global financial markets was the way in which the pound tumbled because of tax cuts there. And that led to, as you just heard Mangalam say, the rupee the dollar go to fresh 20-year highs, 114, and US bond yields went up to almost 3.8 on the 10-year and 4.2 on the 2-year. Think of a typical fund. When the risk-free return, where there is no currency depreciation fear, gives you like 4% for a 2-year and nearly 4% for 10-year, then it becomes more attractive to move away from EM currencies. So we saw the rupee fall in the NDF market in New York, and we saw all Asian currencies today down nearly 1%, between half and 1%, and the rupee had to follow suit. A Reserve Bank was there supplying dollars like it did even on Thursday and Friday, but it is not trying to protect a level. It did help the rupee end a little south of 81 on Friday, but today at 81.5, 81.6, 81.65, there was supply, but it was not giving an indication that it would, support a particular level. So traders are watching. How long will FIIs keep selling? At what point will they stop buying dollars? At what point RBI says this far and no further and starts supplying torrential amount of dollars? It's really wait and watch. Since the Reserve Bank protected a whole number like 80 in the past, people were watching for 81. Now they will watch for 82 and see if that's protected. Simultaneously, as the US yields went up, Indian yields have also risen. So the crude fall is not that big a factor. We are moving in sync with global yields. And now the yield on the 10-year is higher than what it was on June 30th. So this becomes a mark-to-market loss for the banks. And that may explain why the financials, which were such hot favorites 2 weeks ago, have now become another factor of sale in the market. So all these are going to be watched. The Citizens Monetary Policy Committee of CNBC, which is a shadow MPC, is looking at a 50 bips hike, and that's exactly what the markets are pricing in. The 1-month OIS and the 2-month OIS are factoring in a 50 bips rate hike on Friday, and the 1-year OIS is looking at a 6.9 terminal repo rate. So quite a bit of rate hike expectations.
All right. Thank you.